All right, 75 points, so a little more selling coming through, and I guess understandable. 17,994 is where we are at, which is down about 0.4% from yesterday's close, day on day. Well, time for our segment D Street Chatter. Nimish is standing by, and he's going to tell us what the chatter in dealing rooms is with regards to today's incredible market moves that we've seen. Nimish, over to you.
Hi Prashant, it's actually incredible. You know, the way we've recovered from intraday lows, it's really been very sharp, and that's largely led by financials and the cement stocks. In terms of financials, yes, there is buying interest from larger FIs, and that's been the trend for the last many days. You know, every day that's a feedback that there is buying interest in the banking stocks, and that's been the case today as well. So that's the reason why the Nifty bank is up more than 1.5%. Cement is where all action seems to be. Big moves in the cement stocks. India Cement is locked at 10% upper circuit. Abuja is almost there, 9-10% up in today's trade. I guess there is a lot of chatter now of a further consolidation as well in the cement sector, and I guess everybody is now waiting for the 16th board meet on what the Abuja's next plan is going to be. That's what is leading to a lot of excitement in the cement sector, is what I understand from the dealing rooms. In terms of flows, while there is not big buying interest, but there is lack of selling as well. You know, that explains the move in the large cap names as well in today's trade, and there is enough interest not only in banking stocks but some of the large cap names as well. The only sector which is under pressure today is the technology names, and we've explained since morning as well. There is a Goldman note, there are macro concerns as well, and that's where the IT stocks are under pressure, largely on selling flows. But broadly, I guess there is a lot of momentum. Technically, we are in the breakout zone, so that's helping the market as well. And there is momentum, especially in the financial names by the larger institutions.
Nimesh, what a baffling mood on cement stocks! Wow, you know, a lot of them are up between 9 to 10% odd. I don't know what's going on there, but what's the news you're picking up on various companies?
Well, for cement, Nigel, we spoke off the record as well, right? As to there is a lot of chatter across the entire cement basket. Coming to individual stocks, the first stock on my list today is Sundaram Fasteners. There was a large block deal, 1.2% equity has changed hands, and the overall feedback is maybe one of the large FI was a seller in today's block deal, so that disclosures will be important. But looks like there is a large FI seller who sold out of Sundaram Fastener today. So that's the first one. The second stock is L&T. While the entire IT basket is down, L&T technology stocks are under pressure. But even L&T parent is under pressure today, largely on sell flows at the leading FI. So there is some bit of profit booking in L&T as well in today's trade. The third stock is Wipro. We spoke about the IT names. While Goldman has upgraded Wipro to a buy now, but I understand there's going to be market at close selling pressure at a leading FI desk in Wipro. So maybe Wipro will be under pressure in the last half an hour trade in today's session. So that's the third one. And the last stock is Granules. You know, after a long time, that's come into my chatter list. Within the pharma names, that one stock stood out for me today, purely on back of buy flow. So it looks like at these levels, some bit of FI interest is back in Granules, and hence that stock is slightly buzzing in trade and on good volumes.
Okay, all right. Nimesh, thanks so much for joining and giving us those quick inputs. By the way, the markets are calling for our attention. So you have your levels really sorted out now. 18,100 appears a bit of a support zone, resistance zone actually. Supply zone is what we're seeing, 18,100, 18,080. You know, that seems to be a level where in fact we are seeing some bit of selling, and that's precisely what's happened today as well. But just pull up the Nifty bank, which was up more than 750 points. At high levels, we did see some selling out there as well. And, you know, it's come off a goodish bit from the day's high. Just pull up a few stocks actually from the Nifty pack itself. You have Wipro that's moved a little bit lower. HDFC, that's a large name in there. That's done a bit of a slippy slide. And you have Sun Pharma as well that's suddenly taken a bit of a knockout there. So a good resilient performance, one will have to say. But towards the end, you know, the last 20-25 minutes odd, the bears have come back in style, it seems. You know, they're not letting the bulls get away. 18,100, they want to defend that. Mitesh, what are you making of, this final 30 minutes or so where the bears have fought back? Levels you're looking at on the Nifty and your trading picks as well.
So, Nigel, actually, my understanding was that 18,050 may not be crossed on the upside. We did venture beyond that, the high being 18,071. But I think this is still a market, which with the gap breakdown should go into some kind of consolidation rather than, immediately restarting an uptrend. So I think that might still play out. We might have got a pivot at 18,071 now. And on the downside, 7850 remains the first area to watch it. I think it will be a market which will consolidate for next 2-3 sessions at least. On the stock side, Crompton is an STBT with a stock at about 408 and a target of around 397. And L&T Finance is something which I think can be taken on the long side, or BTST kind of a trade can be taken here. Keep a stop just below levels of around 83.5 and a target of around 86.5 can be looked at.
Okay, all right. Thanks for that, Mitesh. Well, let's focus on the cement names. Abuja Cement's higher in trade on the back of news flow of fundraising. Now, remember, they're going to be meeting on September 16th. No more details with regard to the quantum, to who the fundraise is going to be done, or the instrument as well. They're going to use equities, convertible equity. You're not really clear on that. Remember, in the recently concluded open offer, there wasn't any big success, and that's obvious because the share price was higher than the open offer price also. Keep in mind that Abuja Cements, well, they already have a good amount of cash. On a standalone entity, they have close on 4,000 crores. The consolidated entity, more than $1 billion odd. So now they'll be flush with cash. Why does the street like both these two stocks? That's ACSC as well as Abuja Cements. They believe there's a new promoter. The Adani Group will be far more aggressive. And that's what could help them in terms of market share. Remember, the erstwhile promoter was, far below par, actually. And we didn't see any big capacity growth, didn't see any big aggression out there. The other factors on a cost basis, on a cost per ton, ACC and Abuja, well, their cost is closer to 200 rupees more than, say, an Ultratech or a Shree Cement. So the hope is that that'll get bridged, and maybe at some point of time there'll be a merger as well, which will bring in further synergy benefits. Why is the rest of the street buzzing? Well, because there is hope of consolidation. You have a new promoter coming in there, that's the Adani Group, with the big watchers. Are they going to be buying a few assets out? If that's the case, there'll be some consolidation. Consolidation leads to better pricing, and better pricing leads to better profitability. So those are the hope trades that are playing out there. That's the reason Abuja is flying away, and the rest of the cement industry as well doing pretty well. Anand Tandem joins us. Anand, every fortnightly when we chat, we ask you what's your take on the cement stocks. I think now there's a bit of a risk, because even if there is consolidation, some of these names are going to get left out, which are trading above what they've traded in the past, particularly from the broader markets. Your take, stick to the large names if there is or there isn't consolidation, or do you believe some of these smaller mid-cap companies, they still have value out there?
Well, if you take value in the traditional sense of companies which are likely to be taken over, and where there is perhaps some kind of upside that may happen because of strategic moves, then the smaller ones are the obvious ones. Obviously, nobody's going to be buying the larger companies. But from a point of view of a business as usual, if you're looking for investing in companies, then the larger companies are expensive and the smaller companies will remain cheap. So I don't see significant upside from here for the sector as a whole, or for the market as a whole as it is. Because from here onwards, the risk to earnings is fairly high. They've taken a price hike. That price hike typically has not sustained in the third quarter. We are going to be, which is what we are going to be entering soon. The volumes have been somewhat suspect. So overall, I don't see that the scenario is such that you are going to have a runaway boom in terms of where the valuations already have reached.
Anand, we've tracked markets. And talked about markets with each other for a long time. Have you seen a day like today? I mean, we're down a little bit now, 0.5% or so. The US is down 5%. And the market actually was still 15 minutes back in the green.
Well, that's true. I mean, India has been amazingly resilient. And, there has been talk now of the fact that we've kind of not only decoupled from emerging markets, but also perhaps from the fact that we were earlier taking cue from what the developed markets are doing and don't seem to be doing that anymore. But if you look at where we are headed, I don't see much reason for the decoupling to happen. I mean, it is not as if we are on a different planet, not yet anyway. So if you are even, for example, we are talking about domestic capex as the big trigger for the market now, and if you see that's where much of the incremental flows are moving into. But the domestic capex is largely happening in those sectors which are meant to be PLI. So you are looking at those which are going to be looking for exports. So if the export markets are not going to do well, I don't know how the investments that you're making in capex at a time where your capacity utilization is still not very high is going to play out. Similarly, if you look at where the auto ancillaries are moving, which is again the next sector, which is besides banking, which is catching a lot of attraction. Yes, to some extent, India will obviously gain more traction. We are a very small part of the global market in terms of supplies, and therefore we will continue to increase. But again, if you have a slowdown in Europe, and you have, the order book's not great in America, then I don't know where you're going to be selling these things to. So I think there is reason to be cautious, especially at these levels, for even those sectors where the analysts are the most bullish in terms of earnings growth.
Okay, all right, Anand, the valid view there, some bit of caution as well being put on the table. But stay with us, Anand. For the timing, we'll slip into a short break. Come back. We'll get Anand's view on a few more stocks and we'll wind down the market action for the day.